Your Monday morning business hit now with Peter Switzer, the founder of the Switzer Report. Pete, good morning to you. I just spoke about the RBA to Olivia Casely in Canberra a short time ago. So it's going to be the rate call tomorrow. Michele Bullock's first. Most economists predict the cash rate to remain steady. What's your view?
I wrote last week, the RBA just couldn't be dumb enough to raise interest rates at this point in time. Now, we know that the 12 interest rate rises haven't affected all Australians with a debt, home loan debt, because 40% of people had fixed rates. Now, we know these people are coming off now, and that's why we're starting to see retail starting to slide. If you start looking at the data, Pete, there's good reason for the RBA to hold fire and watch data over the next 2 or 3 months. And if the data doesn't show that interest rate rises are working, sure, they have to raise interest rates. But there's no reason for them to go now and probably for the next couple of months.
I guess, the only reason to be would, there'd been a slight uptick in inflation month to month, driven mostly by fuel. Quite staggering that that's gone up 10% since the last meeting, Pete.
Exactly. But, when the Americans got their PCE, which is the inflation data that the Federal Reserve really watches closely, if you look at the core inflation, it's still sliding. And I think our core inflation is falling as well. The headline one will be affected by oil prices, but they are temporary. And I hope the Reserve Bank is smart enough to look through it. If they don't, we could end up with a recession next year, which is what most economists don't expect. But if they get this interest rate call wrong, they could easily create a mild recession next year.
Okay, the one of the big economic movers of the week, Pete.
Yeah, well, certainly I believe that the RBA decision tomorrow and what Michele Bullock says in her first statement is going to be really, really important. We've got job ads as well, Pete, and job ads are going to be critically important. And similarly in the US, they've got their jobs report on Friday, and it's the labour market that's going to be critically important for central banks. If the labour market is showing that interest rate rises is starting to affect those labour markets, then I think there'll be an expectation that interest rates have hit the top. If the labour market remains strong, well then, what I've been saying earlier about the Reserve Bank, raising interest rates in the future, they will raise if that labour market is off the boil, because that's where inflation will be driven in the next few months, out of wages, out of labour markets. And if people are losing jobs, then I think the central banks will think we're doing our job right.
All right, there you go. Peter Switzer, the founder of the Switzer Report. Thanks, Pete. Talk to you next week.